Today I want to take you through the Mincor story and really what's happened over the last 12 months. I want to talk about our discovery and how we've converted that to a reserve. I want to talk to you about how we're a very low capex startup with very low risk. I want to talk to you about our strategic importance, particularly where we sit in Kambalda in Western Australia. Our funding position, where we are in a very enviable position for a development company. Talk a little bit about the upside to some of our deposits and especially our discovery at Cassini, but also if there is time to touch upon nickel and its impact, future impact on the EV market. So the title of today's presentation is Putting Nickel Back into Kambalda. A little corporate slide to start with. You can see that over the last 12 months, shareholders have done well if they had invested in Mincor. And that's with a backdrop of a nickel price which has been pretty flat over that time. Really what nickel does get impacted by global events, both positive and negative. And over the last 12 months we've had some negative news obviously with COVID and trade wars. So the performance of Mincor is really testament to what we've achieved over the last 12 months as we look to restart operations. We feel that we're in the right commodity at the right time. We're a little bit different to lithium in terms of electric vehicles. Nickel sulfides have been mined for many years, and the greatest market by far is stainless steel. And with government stimulus packages about to be rolled out, one can expect that stainless steel demand will be fairly strong. But at the same time, I think the world has got used to a cleaner environment during the pandemic, and we've seen the reintroduction of electric vehicle subsidies, which means it's all good news for nickel because the move for electric vehicle batteries is to high nickel content, and nickel sulfide is the best way to get that. A couple other key aspects for us is that we're in a tier 1 location in Kambalda. Companies have been mining in Kambalda, which is just south of Kalgoorlie, for over 100 years. We're not subject to cyclones. We've got a ready-made workforce right next door to us. But there's a few other points that I want to take you through. We like to keep our strategy simple. It's all about our restart, and we are on the precipice of making a final investment decision towards that restart. And recently, we just completed a capital raise for $60 million, which was overwhelmingly supported. We had two strategic shareholders who participated quite heavily. IGO Limited, of that $60 million, contributed $13 million, and they are one of the leading nickel producers in Australia, so clearly like our project. And Wyloo Metals, which is part of a group called Tatarang, which ultimately is part of Andrew Forrest's empire, is also followed their money and a 13.8% shareholder in the company. So there's a lot of faith being shown in Mincor. One of the keys that I'm going to talk about and probably mention a few times, we've made a brand new discovery in Australia's richest nickel belt. And what it shows that mature areas that don't have greenfields exploration can unearth particularly exciting deposits. Very busy slide that hopefully you'll be reading with this presentation, but really it's a summary of the achievements over the last 12 months. One of the key aspects that you'll see is that we've upgraded the Cassini mineral resource 4 times in just over 18 months. And there's a slide that I'll show you later that talks about, which depicts how Kambalda nickel resources grow over time once you get into operation, and you'll see how well Cassini is already placed. So some of the fundamentals. Why are we strategically important? And the slide I've got up at the moment goes through the flow sheet of nickel in Western Australia, and by far the largest nickel producer is BHP. And we are absolutely critical to their future plans. We will be providing nickel concentrate to them, which will go into their smelter and will ultimately feed into nickel sulfate, which will go into batteries. And BHP rely on third-party feed. And we've signed an offtake agreement and a processing agreement whereby we get to use their infrastructure, so we don't have to build a plant. We have very low capex. We use their infrastructure, we produce a nickel concentrate, and as soon as it's produced, we sell it immediately to BHP. And it's of high quality. It's what initially the Kambalda nickel region was designed on, as on Kambalda nickel concentrates in the smelter. And so strategically very important, and both of our mines happen to be, if you're a golfer, around a 3-iron away from their infrastructure. And all our tenements in the northern area of Kambalda also butt up against BHP. And you would have noticed also that BHP are back in love with nickel, and they want to grow nickel. And again, we are critical to their future supply chain. A little bit about Cassini. Cassini is the first discovery in Kambalda in 20 years. So over 1.6 million tonnes of nickel has been mined in Kambalda. But what a lot of people don't understand, over that last 20 years, there's probably been less than $20 million spent on greenfields exploration. And so we've come along, we've made a discovery on a new belt called Cassini. And we've progressively grown that resource. And some of those intersections that you'll see on this slide are some of the best intersections that you'll ever see for nickel. Particularly our last one, which was 17.6 metres at 5% nickel. To put that in context, in copper terms, you're talking about a copper intersection which is well north of 10%. And so that's pretty special if you're a geologist. So we have now upgraded the resource 4 times. We're still very shallow in the deposit. We've converted it into a reserve. We've now completed a definitive feasibility study where Cassini will come into operation. The next slide that I'm showing you is I find fascinating. It really depicts where a mining project in Kambalda, in the nickel region of Australia, starts as a pre-mining resource, but where it ultimately ends up as a mined resource. And you'll see here that a number of those grey and blue bubbles, they start at a certain area, but they generally end up anywhere to 2 to 4 times greater than their starting position as a nickel resource. And in fact, the best one, Otto Juan, which was owned by Mincor for a period of time, started at a 17,000 tonne nickel resource, but by the time it was finished mining, was 317,000 tonnes of nickel. And you can see quite clearly in red where Cassini is. We haven't started mining yet, and so you can make your own judgment as to where this will potentially end in the future. Also, we've been active with a little bit of M&A, and we purchased the Long operation of Independence Group Limited, or IGO Limited as they're now known. And as part of our mine restart, we'll be taking some nickel from Long, but also from Durgan North. But what's not really well understood here, and this image shows roughly around a 6-kilometre view, and that 6 kilometres, over 1 million tonnes of nickel has been mined. But within that 6 kilometres, 1.1 kilometres has not even been explored, not a single drill hole. You've had separate owners on one side of the border, which I like to call it's almost like the Korean demilitarised zone. You've got North Korea on one side and South Korea on the other, and they don't want to talk. Well, now we're unified, and we're going to connect up those ore bodies, and we get 1.1 kilometres of space, the most prolific nickel belt in Australia, not one single drill hole, and we are going to be drilling it, and we're funded for that from the recent capital raising. That is particularly exciting. Very quickly on the DFS, and I'll keep this very high level. One of the key features you'll note is very low capex startup, $68 million, with peak funding of just under $100 million. That is particularly low for a nickel sulfide company. Why is that? We don't have to build a plant. We get to use BHP's Kambalda nickel concentrator. We pay them a cost, which is like as if we're an owner, and then we produce the concentrate and we sell it to them. So it's a very low capex startup, hence why the payback is within 12 months. And you can see there that Cassini is a very low cost mine at $2.71 Aussie per pound. Today the current price is around $8.50 per pound. So it's a very high margin mine, and we'll end up producing over 16,000 tonnes of nickel in concentrate. And to put that in perspective against one of our peers, Western Areas, that's around 80% of production for about 20% of the capex cost. I really want to focus on what have we done? What have we completed? What have we worked on during the COVID-19 period, post the DFS? which is when we came out. We completed early works at Cassini on time and on budget, and I'll come back to the funding process shortly. We've gone through an underground mining contract tender, and rather than just selecting the tender, we've actually executed the mining contract. And the mining contract is identical to the costs that we use in the DFS, so no slippage. We're about to embark on finalising our logistics contractor. We've recruited 2 senior general managers who are waiting for us to formally appoint them. We have a final investment decision due in the September quarter. As I said, we've upgraded Cassini for the 4th time, but just keep an eye on Cassini North, which is just adjacent to Cassini main deposit. If we find more resources there, this will prove that we're potentially on to another nickel belt within Kambalda. So on the funding, we completed the 60 million capital raise. It was completed within the day, significantly oversubscribed. What that allows us to do is to both help fund the project, but to also then fund 2 years worth of resource extension and exploration whilst we're developing. So there'll be news flow from exploration, whilst there'll also be development of our project, which is essentially just building declines, not building plant. At the same time, we're progressing a modest debt funding piece. We've completed the independent technical, we haven't completed, but the independent technical expert has completed their report, and that was sent to financiers. And we will shortly be looking for credit approved term sheets. There's an image there of the box cut and the site for Cassini. Pretty exciting that we managed to complete that before making a final investment decision. So in terms of the funding mix, whilst this slide is quite busy, it does explain where all the money is going. And what it shows is from the $48 million that we had prior to the raise in cash at bank, we raised $60 million before costs, and our expected project finance is $53 million. But we have got buffer built into this project. We've built in project contingency, we've built in minimum liquidity, we've built in 2 years worth of exploration and corporate costs. There is buffer against the buffer. And one of the key decisions that the board made of Mincor is that we didn't want to make the mistakes of past development companies where their balance sheet has been too thinly capitalised, and when there's invariably some form of problem that you are not covered. The reason for this raising was to ensure that we don't make those same mistakes. And we are in a very enviable position, and the management team at Mincor know we have a great burden of responsibility which we welcome, and we're custodians of a significant amount of cash, which will be just over $100 million, assuming shareholders approve the second tranche of the raising in August. So with that, I'll end, but just a little reminder, go out and buy an electric vehicle. If you buy a Tesla, there's 50 kilos of nickel within that battery. Remember, the more nickel content in the electric vehicle battery, the higher the energy density, which means your range will improve. And I know from my experience with some other companies in dealing with large battery companies, their biggest concern is where are they going to get nickel sulfide from? And are they going to get it in a responsible way? We're in Western Australia. We're selling to BHP, who have got a nickel sulfate plant in Western Australia supplying into that system. So with that, I'll hand back to you, Paul.
Thanks very much, David. A few investors have contacted us asking, could you provide a little bit more information about the funding requirement going forward? I know you just touched on that then. You may have answered some of their questions. Is there any more information you can provide about the outlook?
Sure. We had a number of global and domestic banks express an interest in funding. We have narrowed that down to 6 parties. Those 6 parties now have the independent technical report, which is a very important document. They'll come back with some questions for us. We'll answer those, and then we will be looking to mandate one of those banks, or could be 2, to go through for credit approval.
And could you take us through the next steps for drilling at Cassini? You did mention Cassini North and the huge potential there. Mm-hmm. Are there any more information you can provide on the Cassini drilling plan?
So with that money that we've raised, we'll have a program shortly designed for Cassini North. All I can say is that with the 5 holes that we've put in there, we always hit sulphides. And it's only 400 metres away from Cassini Main. So it's very close. We may also test near that 17.6 metres at 5%. Our downhole electromagnetic results show that this continues down plunge and has a very strong conductor. We're pretty confident this ore body is going to go on for many years yet.
One final question. You mentioned that Kambalda and particularly Mincor is about nickel sulfides, and you mentioned lithium batteries and the EV market. Why are nickel sulfides particularly valuable, and what's the difference between nickel sulfides and non-sulfides?
Nickel sulfides it's the cheapest form to produce ultimately a nickel briquette or a nickel sulfate. The other type of nickel, laterite, requires significant capital in the order of $2 billion plus to produce 30,000 tonnes. To put that in perspective, we're spending $68 million to produce 16,000 tonnes. And remember, the nickel market is at the moment still dominated by stainless steel. Roughly 70% of all nickel goes into stainless. So unlike lithium that didn't have a market to have a backup, nickel has always had stainless steel and will continue to do so in the future.